you out. Just getting that out the way. Now that that's out the way, let's get the pleasantries out the way. Hey, if this is your first time ever tuning in to Tim's Tidbits, we usually don't hang out outside. You know what I'm saying? We usually be in the study, but we're outside today. But if this is your first time tuning in, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in, especially the Spider Gang channel members who decided it's in their best interest, or it's in their graciousness of their heart, or it's in their just whatever you want to call it, to support the channel financially and join the membership. I truly appreciate it. And speaking of appreciating, if you haven't subscribed, please consider subscribing. If you are subscribed, please share it with your friends and family. Say, hey, I really enjoy Tim's content. He's a complete freaking nut, but I really enjoy his content. Now, speaking of appreciation, if I can find my mouse, let's shout out the channel members with the new fancy dancy badge. It ain't nothing but a few today, but the new fancy dancy badge. We got T. Lewis with a fancy dancy badge. We got Zay, the homie Zay, got a fancy dancy badge. Rod Wells got a fancy dancy badge. Shout out all the members with a fancy dancy badge down here. Like all these members here, they got a fancy dancy badge. And Margot in there somewhere, she go up here. And Rich Genius, they up there. They got fancy dancy badges too, right? What does the fancy dancy badge mean? The fancy dancy badge means that they have been a channel member, an active channel member for longer than a month. That's what it means. If you just got a blue badge, that means you've been a channel member for less than a month. If you got a light blue badge with a star in it, that means you've been an active channel member for longer than a month, meaning you have paid your monthly subscription for longer than a month, right? Then you got 2 months, 6 months, all of that. Y'all know the badge outcome. But again, I really appreciate the support. It's totally unnecessary, but I really appreciate it. So I try to give that recognition to the people who stick around and support the channel in a financial way. Now, let's get to my my notes. My notes. I was gonna go look at the what's the name, but I forgot. I ain't getting into that yet. Let's get to my notes, and then we'll get to the weekend chart prep with the gold and the black spider members, right? And if anybody's interested in what the gold and black spider and silver members are, there's a link in the description. And if you're on the computer, you'll see a join button. It'll tell you all about it. So yesterday, ICT did a Shotgun Saturday Twitter space. Do yourself a favor. Go and listen to that Twitter space. If you want to add anything, you know, like we like to use the term gems. If you want to add any gems to your understanding of ICT's concepts, do yourself a favor, right? Get your notebook, sit down in front of your computer with TradingView open, right? Let me show you what I did. This right here, I'm gonna go to Twitter. I get on the right screen. I'm going to go to Twitter. This is what I'm talking about right here. I'm going to go to notifications. Let's go to ICT notifications. What's this right here? Sunday pre-market analysis. Oh yeah, that's the one I just started watching that one. Right here. Shotgun Saturday, order flow in real-time price action. It's 2 hours long, but I'm telling you, he give out some meat and potatoes in the beginning, do a lot of talking, you know what I'm saying, some good helpful stuff, and then I don't know what exactly at what time, maybe about the last hour of it, maybe before the last hour, but I know at least that last hour, whoo, Charlie, Charlie. Okay, this is his chart that he shared with everybody, right? Right. This is what I did. Let me put his chart over there. Pop that there for a second. Right. So what I did, can I make this? Yes, I can. So what I did, I went to my trading view, right? Went to my trading view. Get out of there. On my ES, if you look over here, you see this right here says ICT chart 21023. Click that right there. All right. Get out of there. Oh, I got to go to the 1 minute. Go down to the 1 minute chart. All right. It's a little hard to squeeze it up, and I might have to give myself a little room. So I give myself a little room. But you get the gist of it. Y'all get the gist of it, right? I went in there and I, pretty much laid it out the exact same way, right? The only difference is, I use my own color scheme of what stuff mean to me. You know what I'm saying? This is the only thing I put on there that's strictly from him. But like, I use my own color scheme, what mean to me. You know what I'm saying? Like a couple places, like over here, you see a red box on mine, and then you just see 2 red lines on his, right? And then right there, you see like a colored in red box on his. Let's see if I can blow this up a little bit. Uh-oh. Okay, what did I do? Oh, I can't blow it up like that. Anyway, it's a little, I made it so that I can understand it. But, and the reason why I did this is because when I was listening to it and I was trying to look at his picture, right? He was being very specific about the candle times, right? And when I'm going in here trying to look at the picture, I can't see, I see the area, but I can't really. So I just set mine up. So when he say, if he said the 1231 candle, I just hold my mouse over and I look down there and say, okay, that's 1231 candle. That's can you talk about? And I'm looking at it on my screen, and he's just talking. So I don't have to look. I ain't trying to look at what he's doing. I'm just listening to what he's saying and looking at it on my screen. And I done marked everything up by the way he already marked it up, and he just walking through the day and these 1 minute candles. And so that's just one, one tip I want to share with everybody is if he's going through the stuff, sit down, take the time to annotate it the way he's talking about it, right? But annotate it in a way that you understand it. Don't, like, as you see, I didn't try to go in and match his colors. Well, both of us got red, but I just happened to use, the red for the bearish and the green for the what's name. And this one over here, how did that end up blue? Why is that blue? What is that? I don't know how that ended up blue, but that one should be green too. I don't know how that ended up blue, but that one should be green too. But I was going through making it make sense for me, right? And then eat like me. I put BSL, he got buy side liquidity. This is my terminology, buy side liquidity, right? BSL purge target, right? That's what I call it. You know what I'm saying? He didn't call it the BSL purge target. He just called it like an estimate run above this right here. You know what I'm saying? And so, when I be talking about buy side liquidity purges, I don't know if you ever heard me say that, but like when I be like, we just kind of poked up above that, we ain't really get a good like run on the liquidity. This is what I be talking about. Like I be wanting to see the purge. I be wanting to see the good run. You know what I'm saying? That's nothing when I be talking about that. I be talking about the buy side liquidity purge. Like I got the buy side liquidity purge target because that's when he be talking about the if you hear me say the equal highs is like a magnet, equal highs, that's a target. That's, you know what I'm saying? That's what we talk about, because he's looking at the field projection from down here to up there, and that's where you get the exact price of your possible purge target, right? He broke all of that down. I get into that in a second. Now, that's just the tip I want to say. Set up your chart exactly how he got it set up so that you can follow along on your chart as he talk, and have your notebook so you can take your notes. So you know what I'm saying, you can take notes along the way. Now, one thing that I picked up from the live that you hear me talking about a lot, right? Let me move the screen out of the way for a second. You hear me talking about this a lot. What's up, everybody? We got first of all, is there anybody in here right now that's not a channel member? Is there any? Shout out, what's up, Robinson, man? What's good with you, man? I see you say you're doing well. So I won't revisit that. Is there anybody that's on right now that's not a channel member? I think I said it for public, if I'm not mistaken. Is there? Wait a minute. You know what? I might have said it for public, but I may not have released the chat. Let me go check that. I may have the chat set for members only. Hold on. I got too many windows open right now. I'm starting to get frustrated. Y'all, hold on. Give me a second. Your videos live, check it. Customize. Yes, I got it set for members only. Now let me see. I wonder whether let me change this mid-flight. I got it set for all right. I just changed it. Okay, I just changed it. Is there anybody that's tapped in right now that's not a channel member? What's up to everybody that is tapped in? Marcia, Michelle, Will, KC, Margot, Rhonda, FC, Robinson, Laverne, here to learn and share. What's up? I see it say like 32 people in here, but them the only names that I see. Anyway, let me move on. And I either see the delay or ain't nobody typing nothing. So let me move on. Where was I? What's up, Father Legends? I updated the what is? Okay, Tranisha. Oh, I guess I'm out of jail for a minute. Okay, I see somebody that's not a channel member made a comment. I see somebody that I had to change the setting. What's up, Angela? What's up, Tranisha? Okay. Now, again, it will, once I reset it, when I get ready to do the chart prep, it will kick everybody out. Now, back to the notes, right? And I'm doing this for people who can't stomach sitting through ICT Twitter rants, and people who don't decide to watch his stuff. That's why I'm doing this, and I'm making it open to the public, like I said, and then we're gonna go do our thing. Anyway, stop making me repeat myself. I know y'all hear me talking about this. I usually call it the Sunday gap. I don't know how long ICT has been calling it this, but recently I picked up new week open gap from him. NWOG. New week open gap. I picked that up from him recently, but I've always addressed the Sunday gap. I usually call it the Sunday gap up or Sunday gap down, right? But now I'm gonna start calling it the new week opening gap, right? And the new day opening gap. I'm gonna be calling it that. So the new week, for those who don't know, just in case, the new week opening gap is the difference between Friday's close at 5 o'clock and Sunday's open at 6 o'clock p.m. Eastern Standard Time, right? The new day opening gap is the difference between the end of day close Monday through Friday, the end of day close at 5 o'clock, and the open at 6 o'clock p.m. Right? That's every single day. So the new week open gap is the Sunday gap up, gap down that I've always talked about. And the new day opening gap is the same time frame, but every day. Now, here's the gem that I picked up from the Twitter space, right? ICT keeps those on his chart. The new week opening gap, 4 weeks back. He keep them on his chart 4 weeks back, because he talk about how the algo don't look at weeks in days in the time frame that we do. We be like, oh, it's a new week, it's over. No, it just look back. And he say keep it on there up to 4 weeks back, because it will tend to respond to the new week opening gap up to 4 weeks back, right? So you're gonna have at least 4 or 5 of them. And then he gave the tip or the idea of keeping it on a separate chart, not on your main chart that you're watching, but keep it on a separate chart. Just keep it there so you can look at it and know that it's still there, but you ain't got like 100 million things on your screen every day, all day. Because then the new day opening gap, he said he keep up to 2 weeks worth of those on his chart. So that means you're gonna have up to 10 new day opening gaps if they exist, right? New day opening gaps on there 10 days back, like at least 2 weeks of them, you know what I'm saying? And you're gonna have up to 4, maybe 5 new week opening gaps on there, and just study and watch how price respects that. Stopping by neighborhood market. Hold on. Get some straws. Get some straws. Okay. All right. Now, the next thing that I picked up. Okay. The next thing that I picked up is order flow, right? Order flow, talk about he talk about order flow all the time, right? And the order flow, when you're paying attention to the order flow, you want to, like, it ain't the order flow that a lot of people talk about. It's more so the same thing that we discuss all the time. Is the market in a buy program, or is the market in a sell program? That's the order flow that he's talking about. And for anybody who don't know what the buy program is, when you're constantly taking out buy side liquidity, meaning you're moving higher, and the discount PD arrays are supporting price, right? The discount PD arrays supporting price, the down close candles are supporting price, and the market is constantly taking out buy side liquidity and ripping through premium PD arrays. Sale program is the opposite. You're constantly taking out sale side, ripping through discount PD arrays. Premium PD arrays are supporting price, up close count. I mean, resisting price. Should I say, when I say supporting the move? PD arrays resisting price. Up close candles are resisting price. And that's the difference between the buy program and the sell program. And the order flow is identifying if it's in a buy program or a sell program, right? Volume imbalances, when you talk about volume imbalances, they're not static. Like, and when I say static, they're variable, right? They're a variable, meaning they can get ran through, right? They'll get ran through, but they're like, I wrote down in my notes the unknown variable of X. If y'all hear me talking about when news coming up, I call that the unknown variable of X, because I don't know what the price is going to do when they get there. So volume imbalances, they're variable where it can immediately support price, right? Or it can go through it and then act as resistance, but then come back through it and then act as support. So it's like with the volume imbalance, you want to make sure you're in tune with what the order flow is right now and what you can anticipate this volume imbalance doing at that point in time. And if you don't understand what I'm saying right now, when I just said that, you need to study a little bit more. You need to study a little bit more before you try to actively use any of this, right? So the volume imbalances are a variable. So you can trade through them and then they become resistance, or you can trade through them and they become support, or you can go both ways and then they'll be the reverse, right? But they are variable, so they're not as concrete or as static as the order block or the breaker or the fair value gap. They got a little bit more variableness to it. It can allow for some slippage, if you will, right? I already talked about that in the order flow. Talk about the opposite color candles supporting price, right? I already covered that. Opposite color candles supporting price. When you know what I'm saying, when you can tell the order flow if it's in a buy program or a sell program, if the opposite colors candles are supporting price. Like if it's not a PD array there, if it's not a discount PD array there or anything like that, but it's going up and the down close candles are supporting the price, then you know what I'm saying, that's part of understanding what the order flow is. Purge of liquidity, right? Purge liquidity. Market is less likely to run out old stops if it gets to the last quadrant of the move, right? So let me explain. I'm about to get the chart to explain this one here, right? I'm about to get the chart to explain this one here. Okay, so all right, talk about purge of liquidity, right? So market is less likely to run out old stops when it gets to the last quadrant, right? If anybody who don't understand, I put down the last quadrant. I think he said in the last quarter. But for anybody who don't know what the last quadrant is, you know, when we break down the range, right? Let's just come here. We're gonna come from here and go to here, this high right here, right? So, you know, we break down, we break it down into quarters, right? So let's hide this, make this 75 and hide this. And I need a negative 75. Okay. Make this negative 75. 0.75. Okay. That ain't what I want. What was that? 0.5. That's the 7. Oh, 2.5. I need a 2.5. That's what I need. I need a 2.5 because I pulled it the other way. There you go. All right. I put it the other way. So that's what I needed. Okay. So now We got this price run. We got this price run right here broke down into quadrants, meaning this equilibrium is right here at 49 and 175. This is the discount. This is the premium. We got it broke down into quadrants, right? Right. We got it broke down into quadrants. So once price gets up into the top quarter or the top quadrant up here, right? Let's bring it this way. Let's take the okay, so right, this we looking for to run out this, we looking to run out this liquidity up here, right? So once we get up, this is the top of our box, this is the bottom of our box. Once we get up into the top quadrant, right, price is less likely to come all the way back down and run out this sell side before taking out the liquidity, right? When you come, like, until you get up to this last quadrant, right, when price starts to pull back, this is what I be talking about. This just added a little bit of meat to what y'all talking about? I ain't fooling with you. I ain't fooling with you. Hey, whenever y'all hear me say, I be talking about, man, we done came too close to this high. The algo ain't gonna come this close without taking it. Right now, this gives more, this adds more of the why behind it for me. Right? This adds more of the why behind it for me. Right? Y'all hold on 1 second. Give me 1 second. I gotta do something real quick. Gotta do something real quick. I'm sorry, y'all. All right. Sorry about that, y'all. Now I'm back. Okay, so this gives more of the why behind the reasoning, if you will, when I be like, hey, price that came just it because it was just based off of my back testing. Once price get, as I like to say, a stone's throw away, right? A stone's throw away it's not part of technical science, as ICT likes to call it, technical science. And I like that. For Zay and everybody else who say I use technical analysis, I'm using technical science. You hear me? Right? So this is what when I be saying a stone's throw away, now we got the why behind that stone's throw away is, right? Once price gets up to the last quarter, I say the last quadrant because, you know what I'm saying, I said we break it down into quadrants, quarter, the same thing, quadrants, quarter, quad, four, right? Break it down into fours, 1, 2, 3, 4, right? Break the price range down to 4 sections. Once you get up into that last quarter, price is less likely, market less likely to run old stops when it gets to the last quadrant. So once it get here, is less likely to run this out before taking out that buy side. So get to the last quadrant, you know, not saying that it won't, but get to that last quadrant, stay up in there, is more likely to go ahead and run that buy side than take out the sell side. And that's the why behind it, right? Institutional market structure. Oh, this was like a gem in 3/4, right? This was a gem in 3/4, right? This right here took me out. I ain't gonna hold you. Let me reset this back, right? TLR projections. Okay, boom. I don't need the OTE, so I just hide the OTE. Right? Okay, boom. Right? So, institutional market structure, right? This right here took me out, right? So check it. If you look right here, right? Let me put the stuff back on so I can readily identify it. If you look right here, let's go to the morning time, it's the afternoon time, right? But if you look right about here, we're going to come here and highlight this area right here. Let me get something that now let me hide this other stuff real quick. All right, and then we're gonna come click this right here, up, undo. Yeah. Oh no. Oh man, what you doing? Right. Come to this area right here. Right? Just highlight these two areas right there. Make sure I put these behind them. Oh yeah, they are. Okay, now looking at this institutional market structure, right? When you talk about, you know, how everybody talk about market structure, everybody, you know what I'm saying? But this right here, the institutional market structure, when he broke this down and like made me see it when he was talking. That's why I say sit in front of your charts while you listening to what he talking about. And when he said it, oh my goodness. Let me just get to the meat and potatoes, right? So everybody know what this is right here, right? Everybody know what this is right here. Everybody know that. Where am I? That ain't what I want to do. That's what I want, right? Everybody know what this is right here. That's kind of fat. Don't want it to be that fat, right? That right there is a swing low, right? That's a swing low, right? That right there, that's a swing low, right? So that's a swing low. Then this right here, that's a swing low, right? So we got a swing low, a swing low, and a swing low. This right here is where it started to get crazy in the mind of little Timmy Rogers, right? Right? If you look at this swing low, and that swing low, right? Forget about all the little candles in between. This ain't how ICT said it, but this how I heard it in my mind. Forget about all the little candles in between and just look at that low, and that low. What do you have? You got a low with a higher low to the left and a higher low to the right, which is what? A swing low. So that swing low, and that swing low, they all formed a swing low. So you got one big swing low right here in the lunchtime, the early portion of the day, right? Come over here. you got the same thing over here. You got a swing low, a swing low, a swing low in the afternoon, right? Right. So that's a swing low. That's a swing low right there. Now, Pete, looking at okay, so you got this swing low here, that swing low there. And then when you form that swing low right here, right? If you run the fib from, right? If you get a fib and you want to see, use the fib, use to project buy-side liquidity purge, right? Attack on relative equal highs. Like if you want to look to see, okay, we got equal highs up here, we got equal highs up there. You know what I'm saying? Now your bias is that it's going to attack these highs right here, right? It's going to attack these highs right here. Equal highs there, right? Get your fib, right? You got your overall swing low there because we done made it and we done got the pang out. We got the pang out right here. The market tipping his hand that is ready to go up. The market showed you it want to go up. This, like a lot of this is just how little Timmy Rogers see it. This ain't everything ICT said, but there's a lot of it is just how I see it. Now that we done got the pang out, so we got the pang out, right? That's a tip. That's a hit, tip in the hand. Now we see the framework. We see the framework right here of the overall arching swing low made up by 3 different swing lows, right? So you can start to run field projections, and the first one you can run is from the lowest low, right? Right from the lowest low on the swing low to the previous high of the first swing low, right? Boom. Go from the lowest low to the previous high, right, of the first swing low, of this swing low right here. The lowest low to the previous high, right? And then you look for the fib extension broke down into halves, like half a deviation, one, like from here, half a deviation, 1 deviation, half deviation, 2 deviation, half deviation, 3 deviation. Look for the deviation above the liquidity you determine that the attack will be on, right? If you say the attack is going to be on this high, your target would be 40, 88, 75. That's the deviation. That's the deviation that's above that high. If you determine these equal highs right here is the target, right? Is the run that you're expecting. Your target would be the 1.5 deviation or 40.93. That'll be your target. If you're looking to get all the way to the top, the deviation that's above that high would be 4101.25, right? Right? And that's just coming from the low right there. Here, where the plot even thickens. You can do it from the second, from the second high of the overall swing high back to the previous high, which is on the leg of the middle, back to the previous high. And then that would give you projections to look toward. Now, let me put the other stuff back on so all this will be making sense, right? Boom. So put the stuff back on so all of it's making sense, right? So coming over here, you see that 4101.25 over there that had the what's the name up there? If I come back over here to this, come back over here to this right there. Let me hide it again. That level was 4101.25. That was ICT's level for him anticipating that to be the high of the day. He marked that out in the morning, or in the lunchtime after all of this right here set up. That 4101.25 was his anticipated high of the day. And that's where it came from, using this structure here. You know what I'm saying? And then the draw was above this buy side up here. So that's where the field projection came using the institutional market structure, right? This is the institutional market structure. Well, part of it, not just that, but this is how institutional market structure look, and that's where he got that projection from. Right now, the plot thickens even more. Right now, you got it in the in just say the first half of the day. Right, you got your institutional market structure here with your field projection here coming over right to this area, right? So now you see this line up here. That's my fib. I keep clicking my that's my fib I'm clicking on. That's why. What did I run that fib to? Oh, that's when I ran over here. I was trying to figure out the high. That's why I ran that fib over there. I was trying to figure out the high. That was the that's why it's got the same number. And I just moved it over. I was talking about the quadrants, right? So you can get out the way, fib. Don't need you no more. Right? So let me hide this real quick so I can look at. So, okay. Now, coming back over here to this one over here on this side of the day, you see it mark. It did the same thing again, right? You see it did the same thing again. And now, if you notice, once it did it over here, the market, the institutional market structure with the swing low, and the swing low, when you come from the second half of the swing low up to the previous high, if you notice, if you look at where the deviation goes to above the liquidity run, right? You look at the deviation above the liquidity run, the deviation that's above all of this right here that we already did, not this one here. So that one, what is that? 4104.25, right? 4104.25. It goes up there. And then this right here, high of the day, right there, 4104.25, right? That was the new high of day that he projected once we made this over here. The initial high of day that he projected was over here somewhere. Was that the same? No, I think that one might have been the same. I think that might have been the confluence. That might have, let me see if that was the confluence. It was. That was the confluence. Yes, that was the confluence, right? So based off this one here, high of day was the 4101.25, and then he got the confluence over here in the afternoon when it did the same thing. The market structure again, the institutional market structure again, used the second half of the overall swing low, right? Back to the previous high and went right up there to where the exact same spot got the confluence. I don't know why I keep doing that. Got the confluence of the exact same number, 4104.25. The same thing that this one gave you, right? The same thing this price leg gave you as a possible high above the liquidity. I keep doing that, right? Here's the high that was made after this run. Once you get the same structure, run the fibs on that last half, it gives you the exact same price. And that's the confluence for, you know what I'm saying, a possible high of day, right? And then, you know, you can keep going up to that. That could be the next possibility if it really get to going. That could be the next, you know what I'm saying, the next possibility there. So that's the part that I say that took me out. When I seen the three swing lows creating one swing low, and then he used the projection off the lowest one for the possible run above the buy side target, and then use the second one for a possible run and above the buy side liquidity, and then come back once it pulled back. Like, since you already ran it here for the possible run, this pullback right here won't scare you out of the fact that we gonna run that buy side unless some crazy news come out to make the market tank. It's not scaring you to the fact where, okay, you pulling back and now we finna die. No, we just pulling back. You know what I'm saying? We pulling back to do whatever. And if it give you another opportunity, which it did here, gave you another set, the exact same setup again. And when you run the projection, it's going back to the exact same spot. So you like, oh, okay, now this is for the afternoon traders to get their run. This was for like the morning slash, you know what I'm saying, afternoon traders to get their run. You got the morning coming down, the lunch running up, the early afternoon running up, came back down, the late afternoon running up, but it's all still the draw on this liquidity right here. I just thought that was amazing. I thought that was amazing. There's some few other nuggets that I picked up in there, but I done spent so much time on that. I'm going to kill that. And then I just want to share a couple things that I took notes on so far from today's video that he was doing. It's just a couple quick notes that I took because I ain't get through the whole video yet. But I called it wick theory, right? I called it wick theory. And he was talking about how like stubby wicks and long wicks, right? Stubby wicks and long wicks, and stubby price, the stubby wicks, the price may be revisited after it hit the CE, right? And then the really long wicks usually act as like a brick wall unless the market is not super bearish or super bullish, right? So for example, like right here, see this really long wick right here compared to the body. This is a really long wick, right? If you notice, the price came down to just past consequent encroachment on that wick, right? Did it go past or did it go to it? Let's see, 40.95.50, and it went down to 40.95.50. Went exactly to consequent encroachment. Went exactly to consequent encroachment and took off. Right, so with that long wick, right, it acted as a brick wall. Boom, gone. Right, and then if you notice over here, right, this little stubby wick right there, and I'm just picking this out on the fly. I ain't even gonna hold you because he just talked about this today, and this is Friday's price action where I just happened to pick this wick just now. This little stubby wick compared to the body, right? If you notice. That thing might be in y'all way, so you can't really see it. Let me see if I can hide this line real quick. Okay, this little stubby wick right here. Let me move my line out the way. This little stubby wick right there. If you notice, price came down here, right, into that little stubby wick. And then traded away from it, and then price came back down again and went below that wick, down to this fair value gap before taking back off, right? So, like you were saying, stubby wicks, price may come down to consequent encroachment and trade away from it, but a lot of times it will come back to that little stubby wick before taking off in the opposite direction, right? But if price is really bullish, because the price bullish here, but it still came back down below that stubby wick. But with this long wick, it came to consequent encroachment and left, and it didn't come back down to it. So that was one thing that I peeped, and I wrote that down as a gem. The difference between the stubby wicks and the long wicks, I'm gonna go back and really pay attention to that. I'm gonna put that into my toolbox and really pay attention to that. And then I wrote down, if a candle's wick CE is hit by the wick of the candle right before it, then the CE may not get hit by the wick that comes right after it, right? So right here, let's just use this right here for example. These right here. So this candle right here, right? This candle right here, since this green candle before it, now you don't know that this is the CE above or at the CE of this wick right here when it's trading. But when you see it set up, right, and you like, okay, we just took out buy side, we can possibly be going short. And this just little Timmy Rogers talking now. This right here can be a precursor to anticipate a turtle soup, right? That's how I thought it in my mind. Don't just take my word on it, back test it, and look at it for yourself, because it's something that I just heard today. But that's what came to my mind. It could be a precursor to a turtle soup, right? So this candle here, right? This 1254 candle right here. If you notice this 1253 candle, if you look, it came up and it happened to be above the consequent encroachment of this candle right here, right? So now that you see, now that this candle has been made and we come and open this candle up over here, now we can see, hey, this candle met the consequent encroachment of this candle wick, met the consequent encroachment already of this candle wick prior to it being made. This is a high probability that this candle, you know what I'm saying, may not even get back the consequent encroachment. But if it do, it's a highly favorable time to short it or long it on the other end. Highly favorable time to short it. And he said a lot of times you will see him taking entries up here, and it seemed like it's for like no apparent reason, but this is the reason. Because this candle prior to it, the long wick on this candle already met consequent encroachment on this long wick. So now this one here, there's not a whole lot of reason for the algo to be trying to get back up here. So when it come back to consequent encroachment, right, and on this case right here, it went to exactly consequent encroachment. I'm looking at it. The high on this candle is 4103.75, and consequent encroachment on this wick is 4103.75. It hit consequent encroachment to the tick and then sold off right there. And that was a gem in 3/4. And it was like, and I was like, man, that's a good way to, this just what I'm saying now. Don't take it. I'm like, man, that's a good way to anticipate a turtle soup, because you looking like with the turtle soup is going above old highs. So if you go up above old highs, and then this candle got a long wick, and then this one here shoot up and make a long wick, and that wick hits the consequent encroachment on that, and then the next candle open up, you can anticipate like man, this turtle soup, I could just short this here. You know what I'm saying? So I thought that was a gem in 3/4. That's all the stuff I want to share as far as like notes from like ICT. Anybody that's in the memberships, I don't know what time the pregame stuff gonna start. Y'all welcome to stick around while I go through and start like doing my charts. While I go through and start doing my charts, y'all welcome to stick around. Everybody else, when I switch this over to members only, if you're not a member, then the stream gonna cut you off.